Rates just dropped by 25 basis points, so if you're planning on making a move this summer, you need to stay informed. And what better way than with this month's market update? Despite 2 years of consistently increasing interest rates, the Bank of Canada finally cut the key interest rate by 25 basis points or 0.25% on June 5th. Just as we predicted in our January market update. I think for the next 3 consecutive Bank of Canada announcements in January, March, and April, the rate will stay the same. We're not going to get a reduction. They'll ride it out a couple months into the June announcement, and I think they'll likely reduce the rate a little bit then. This marks the first time interest rates have been reduced in the past 4 years. Last month saw a dip in sales across all property types, with condos taking the biggest hit. The condo market is flooded right now, making it tough for sellers, especially those with smaller units. Now, let's start with total sales. A total of almost 750 residential homes were sold through the MLS system in Waterloo Region in May. This represents a decrease of 8.1% compared to the same period last year, and a decrease of 20% compared to the previous 10-year average for May. Total residential sales in May included 467 detached homes, 59 semis, 134 townhomes, and 82 condo units. So that gives us a good overview of activity. Let's take a look at price. The average sale price for all residential properties in Waterloo Region was just under $820,000, down 0.3% compared to May of 2023, but up 2.3% compared to April of 2024. The average sale price of a detached home was just under $945,000, down almost 2% compared to May of 2023, but up 0.4% compared to April of 24. Semis were just under $700,000, while townhomes were just under $655,000, and apartment-style condominiums were just under $460,000. Now let's wrap it up with volume. There were 1,644 new listings added to the MLS system in KW and area in May, which is up almost 29% compared to May of 2023 and up almost 16% compared to the previous 10-year average for May. There were 1,741 homes available for sale in an active status at the end of May. This is an increase of almost 96% compared to May of 2023 and up almost 28% compared to the previous 10-year average for May. Now, this is a huge benchmark. May is the first time we've seen months of inventory climb over 3 months. This is an increase of 93.8% compared to last year. The condo apartment segment gained the most inventory, which increased by 100%. The average number of days to sell in May was 16 compared to 14 days in May 2023 and a previous 5-year average of 15 days. Although the 25 basis point interest rate reduction is not going to have a significant monetary impact for your affordability, if you're in this market and currently have a mortgage that's variable, or if you're planning on actually purchasing a home, it's only going to impact maybe on average around $100 depending on your purchase price per month. Now, if you are currently in a fixed mortgage, it's not going to impact your affordability at all until you renew your mortgage into a new mortgage at new current rates. Variable mortgages will be impacted depending on the type of mortgage that you have. It may reduce the amount of interest that you're paying, or it may reduce the amortization depending on the type of mortgage that you're locked into right now. Now, new buyers and new sellers that are buying, getting into the market right now, if you're getting into a variable rate, those will be more impacted by this swing in interest rates from the Bank of Canada with the key interest rate adjustment. But fixed mortgages are more impacted by the bond market, which we'll see how that shakes out over the next few months. Now, the biggest thing and the biggest impact and variable right now is buyer sentiment. Seeing interest rates be reduced gives buyers and also sellers more confidence in the market and more confidence that rates will now, we've kind of reached the peak of rates and now we'll be climbing down. The rumor is the Bank of Canada wants to reduce rates 2 more times this year, which has been adjusted because they really wanted to reduce them aggressively earlier, but things are constantly being updated as time goes on. Now, this is a good thing for buyers getting into the market. I think this will put more wind in the sails for sellers and increase some demand and confidence. But also, the reduced rates have other impacts in the economy, which will transpire. Inflation could be adjusted by this, and inflation could start rising because of this reduction. So ultimately, time will tell. But if you're a buyer in this market, now may be the time for you to jump in. There's lots of selection, lots of inventory. We're in the summer market now, where usually things slow down, overall transactions slow down, but it's hard to say what's gonna happen now with this new wild card with the rate adjustment. Now, sellers, same thing to you. Traditionally, the summer is a bit slower. As we get deeper into the summer, end of July and August, things really slow down and don't rebound until about mid-September after Labor Day, when people are back to school, back to business. But at the same time, if your property shows very well in the summer, it's probably ideal to list it in the summer market and get it sold. If you folks have any questions, let me know in the comments below. Let me know when you think the next rate reduction will be. Next month, we've got another announcement from the Bank of Canada in July, and the following one will be in September. Let me know what you think in the comments. If you have any questions, shoot me an email, shoot me a DM, and we'll see you on the next month's market update. Take care.